Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 366 on March the 14th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Marathon Digital Holdings, Devon Energy, and Barrick Gold Corporation, and we discussed three new trades on First Majestic Silver Corporation, the Direxion Daily S&P Biotech Bear 3X Shares ETF, and Xpeng Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the stock market's finished lower yet another week. This is the fourth consecutive week-over-week drop for the S&P 500 index. The Dow Jones Industrial Average lost 1,313 points, closing at 41,488 points. The S&P 500 index lost 131 points, ending the week at 5,638 points. And now it's time for the topic of the week. The topic of the week is market movers. This is an extension of the topic of the week from last week on economics. The factors that are moving the economy right now are tariffs, inflation, and the Federal Reserve interest rate. The S&P 500 index has fallen 7.8% in the last 4 weeks as tariffs on some of the country's largest trade partners have been levied and unlevied and then levied again, and then those countries have responded in ways to show their disapproval. This last Wednesday, the Consumer Price Index, or CPI, was lower than expected and lower than previously reported. This is a key marker of inflation, so seeing it go lower means that inflation seems to be going lower. Tariffs lead to higher prices or inflation, but the CPI for the last period has decreased. What should the Federal Reserve Bank do? Well, I don't expect Jerome Powell to call for my opinion anytime soon or even to listen to this podcast. But with so much uncertainty, especially with the president occasionally mentioning the possibility of an upcoming recession, I would hold the rate unchanged this upcoming Wednesday, March 19th. Raising the interest rate would tank the economy and be tough to justify given the direction the CPI is heading in. Lowering the rate could lead to inflation, possibly adding to the inflation that could come with the tariffs. Holding the rate steady seems to be prudent. That's the very thing we want the Federal Reserve Bank to be, prudent. If we go into a recession or start to approach it, a stream of future rate decreases could stimulate the economy. Now for the big question. What will your portfolio do if the Federal Reserve moves the rate or keeps it unchanged on Wednesday? Think through it and see if you need to make any adjustments on how you allocate your capital. So that's it for this week's topic of the week. Let's go ahead and get into the trade review of last week's trades. We'll start off with our covered call on MARA, or Marathon Digital Holdings Inc., symbol M as in Mike, A as in Alpha, R as in Romeo, A as in Alpha. At the time the stock was trading for $16.02 per share, I looked at buying stock and selling the March 17 call at 76 cents, hoping for a return of 10.86% in 2 weeks. Well, shares of Marathon Digital fell $2.84, ending the week at $13.18 per share. The call option we sold lost 73 cents, leaving us with a net loss of $2.11 if we were to close the trade out immediately. Now, this is yet another reminder that the riskiest part of a covered call is not the option. It's the fact that the stock can fall lower than the premium collected on the option, leading to a loss. Now, my first response is to roll the strike lower. I like doing this to regain part of my loss. However, I do not want a quick jump in the stock price to take me out of the position before I have a chance to make some of my money back. I would normally sell an option with 1 week left until expiration, but the premiums are super low right now in March. I would look to sell the April 15 call at 81 cents, which would lead to a net profit on the trade of 53 cents if that stock were to expire above $15 per share on April the 17th. Now, if you're familiar with the weekly options, the April 4th expiration offers some additional opportunities to lock in a profit. Either way, given the move that occurred this week, an adjustment is definitely in order. Next up, we have the credit spread on Devon Energy, symbol D as in Delta, V as in Victor, N as in November. At the time, the stock was trading for $34.71 per share. I looked at selling the March 34 put spread at 17 cents. That could lead to a maximum possible loss of 33 cents per spread. Well, shares of Devon Energy lost 17 cents, ending the week at $34.54 per share. The out-of-the-money put spread that we sold is still out of the money. If you were to cross the bid-ask spread and close the trade out immediately, you would lock in a loss of 6 cents. Now, the stock is still 21 cents above the break-even point, which means at the moment there is no need to make an adjustment. You will definitely want to keep track of this one as we approach expiration on Friday. As long as the stock expires above $34.50 per share, you'll keep the full premium you collected when you sold the spread. And our final trade from last week was the debit spread on Barrick Gold Corporation, symbol G as in Golf, O as in Oscar, L as in Lima, D as in Delta. At the time, the stock was trading for $18.62 per share. I looked at buying the March 18.5 call spread for 34 cents, hoping for a maximum gain of 16 cents, or that's a 47% return in 2 weeks. Well, shares of Barrick Gold gained 16 cents, ending the week at $18.78 per share. The in-the-money call spread that we bought is still in the money. The stock is 44 cents above the break-even point, so there's no reason to make an adjustment at all at this moment. Keep track of the stock price this week, especially given the economic news that's coming this week. Always be prepared to make an adjustment if that time comes. So that's it for the trading review of last week's trades. We are 1 week away from March monthly option expiration on Friday, March 21st. Of course, there is a Federal Reserve interest rate announcement on March the 19th that you might want to be aware of. All new trades on today's show will use the April 17th expiration for monthly options in April. So let's start with the new trades for this upcoming week. I'm looking at a covered call on First Majestic Silver Corporation, symbol A as in Alpha, G as in Golf. The stock ended the week at $6.67 per share. I'm looking at buying stock and selling the April 7 call at 38 cents, hoping for a return of 10.64% in 5 weeks. Now you enter this trade by buying stock for $6.67 and selling the April 7 call at 38 cents. This trade makes the most money if stock prices finish above $7 per share. The break-even price is $6.29 per share. In real terms, the stock purchase will require $667, and you'll collect $38 for selling the option. Next up, we have a credit spread on the Direxion Daily S&P Biotech Bear 3X Shares ETF, symbol S as in Sierra, O as in Oscar, X as in X-ray, S as in Sierra. The stock ended the week at $24.41 per share. I'm looking at selling the April 24-23 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Now you enter this trade by selling the April 24 put at $2.94 and concurrently buying the April 23 put for $2.54. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $24 per share. The break-even price is $23.60 per share. In real terms, you'll collect $40 per spread that you sell and have $60 at risk. And then our final trade for this show is going to be a debit spread on Xpeng Inc., symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. The stock ended the week at $23.74 per share. I'm looking at buying the April 22-23 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that's a 66.67% return in 5 weeks. Now you enter this trade by buying the April 22 call for $3.30 and concurrently selling the April 23 call at $2.70. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $23 per share. The break-even price is $22.60 per share. In real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for this week's show. Thank you guys once again for listening. Thank you for following along with me. I actually am skiing Colorado this week, so I'm enjoying the month of March pretty heavily. Lots of playtime, but still some work because there's money to be made as this market moves around. So hope you're doing well. Hope you have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.